Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, January 14, 2015. And today is known as Whipsaw Wednesday, Weird Wally Wednesday, Weird Wacky Wednesday, whatever you want to call it, it's Weird Wednesday. During the week of options expiration day, Wednesday, you usually get a lot of whipsaw action, and that's exactly what we saw today. I told you this was going to happen yesterday. To the extent, obviously, we can't know, but yet again, it did happen. So this is a daily chart of the SPY, and look what happened. Remember yesterday, I drew this trend line in. Yesterday, it was red, but today I made it blue. So the reason why I drew this in is, and I just want to make you aware, I'm not drawing this trend line in. The market draws the trend line. And what I mean by that is you have a low, you have another low, or a higher low. And when I drew this line, this bar didn't exist. We were here yesterday. And what I said was, if this holds, that's a bullish sign. And if it breaks, we'll either go down and test this level here, the 200 period moving average, or way down here, and not necessarily all in one day. But I just want to go, the reason I drew it back in is because I want to show you that this market today, the market said this line was important. Okay, we pierced through the line, but by the end of the day, we rallied back up and closed above that line. That's a bullish sign. A lot of other things happen. We'll talk about them in a minute or so. But what I wanted to point out was that this line that the market is drawing has been deemed important. Whether we break through it tomorrow or Friday or next week sometime, that's a different story. But right now, the market says that this trend line is important. Therefore, it's important for now. What do we have going forward? Well, since the market finished on a positive note, in fact, let's take a look at the intraday for a second here. This is the 10-minute chart. So you gapped down, tried to rally up a little bit, and then collapsed all the way for the rest of the, not the rest of the day, but most of the day, okay, up until about 1:30 in the afternoon, 1:40 in the afternoon. And then we started rallying up towards the end of the day. That's typical for a Wednesday of options expiration week. Now, what this is this is actually forming a bullish pattern, so we may get some more upside tomorrow. And if we get some follow-through, let's take a look at what the 60-minute chart looks like. I haven't even looked at it yet. Okay, well, there's not much to tell from this anyway, but let's go back to the daily. If we get some follow-through tomorrow, okay, and we start to move back up, okay, we can certainly see some of the stocks that got hammered early today start to recover. And we'll see. We'll take it one day at a time as we normally do. But today wasn't out of the ordinary, although it did go down quite a bit today. The S&P was down, I think it was about 33 points or so at the low today. Finished down only 11.76 points, and the Dow only finished down 186, but it was over 300 points at the low. So that's one of those scare me out of the market rallies. And then as folks get scared out of the market, and remember I told you yesterday, the institutions have the ability, the big banks, the hedge funds, the pension funds, they have the ability, with all the money that they can slosh around the markets, they have the ability to move the market almost in any direction they choose. And today was indicative of that, and it was pretty obvious that they dropped the market down, they cleaned out some of the puts and calls that were down there, and then they rallied the market back up, and they basically whipsaw the average or inexperienced trader or investor, and they take their money each and every options expiration week. This week was no different. Today was no different. Okay, so what do we have for tomorrow? We'll have to see. I tend to believe that we're going to see some follow through tomorrow, but there's really nothing telling me that we're going to go one way or the other. So it's more of a guessing game. It's more of a feeling. I feel like we'll have some follow through tomorrow, but that's not to say we can't go back down either tomorrow or Friday. It is options expiration week. Therefore, I guess you can just say expect the unexpected, and that's the best I can do during options expiration week. Okay. By the way, let's take a look at the IWM. What's interesting, and you know this is my favorite market indicator, Nothing happened with the IWM today, right? I mean, it was down early in the day with the Dow and the S&P was down, but the IWM finished down basically 1/3%, while the Dow finished 1% down and the S&P finished over 0.5% down. So the IWM was stronger than those indexes, which also leads me to believe that there's still a bid underneath this market. Now, look at this. Low, higher low, higher low, okay, as opposed to, let's go back to the S&P for a second, and let's take a look at the same thing. Low, slightly higher low, lower low, okay? We came down and we tested this low here, and we didn't stay above here. So if we go back to the IWM, my favorite market indicator, you'll see that this has been the stronger index, and when the small caps are the stronger index, it tells me, and this has served me well over the years, it tells me that there is a bid underneath this market, and therefore, whether we go down more over the next day, 2, 3, 4 days or not, I think there's still a bid underneath this market, and I think we will see a rally, and I wouldn't be surprised at all to see the rally begin next week, and I believe Monday is Martin Luther King Day. The market will be closed, and there's plenty of times when Martin Luther King Day or the day after marks a pivot point in the market, so we'll see if that plays out. So it's something to be aware of. All right, enough with the market. Let's go on to gold, and we'll go to the GLD. And if you remember, I was telling you for weeks now that during the month of January, my target for gold was 1240 to 1245, translating to about 119 in the GLD. Where did we go yesterday? 119. We actually went slightly higher today, but then sold off, and that's not unexpected. I expect a pullback in gold a little bit, and then I do expect another move higher. So if we pull back a little bit here, then we take another move higher. First stop would be the 200 period moving average. Next stop would be about this gap window here at 122.5, then 123.80, 124, and on up from there. I do expect higher prices in gold, not only in the month of January possibly, but through 2015 or within 2015. So something to be aware of. Higher prices in gold are coming, but certainly pullbacks are in the cards. They're not out of the ordinary, and they are healthy, and they are expected in the market. So far, so good in the gold market. We've pretty much called that one spot on. So hopefully you folks have been able to accumulate down here, as I said, and then you wrote it up like this, like I did. Okay, crude oil. Interesting day in crude oil. Now, we didn't see the capitulation low that I'm expecting. We didn't see the bottoming tail. We didn't see that market reversal, although we did see somewhat of a reversal in oil, meaning crude oil was trading down at the $45 level. It finished at $48.76. That's a nice reversal in crude oil, only it may just be a short-term bounce. It may be short covering. We're not exactly sure yet, okay, because all we did was come right into this resistance point here, although it was a strong day for oil, strong day for USO, and there was heavy volume. So as an example, the USO today traded 42 million shares. You know, average volume minus the last few days when you were headed really straight down, average volume is really about half that much over the last, let's say, 3 to 4 months. So it is a positive for oil, and it does lead me to believe there are positive things coming for the energy complex, but I'm not convinced yet that we're there. And one of the things I'll also look at is the XLE. Okay, the XLE is a basket of large integrated oil plays and oil sector stocks. And what happened in the XLE, and what you'll see here, I'm going to go to the intraday chart, all right, you'll see that we bottomed out here and then we really took off. So there was a bid, there was a lot of short covering, but then there was a lot of buying as the momentum carried forward in the XLE. And then we're putting in somewhat of a bullish pattern here, so higher prices may be in the cards over the next day or so for the XLE and the energy complex. And by the way, let's go back to the USO for a second because I want to show you the intraday chart, which I neglected to do. That's not it. USO. Unbelievable. USO. Okay. So let's look at the 10-minute and look what happened here. Okay. right at about 2 o'clock, all of a sudden, USO just took off to the upside, a lot of short covering, then the momentum players kick in, and here, this is also a bullish pattern, so don't be surprised to see higher prices in oil, USO, energy complex tomorrow. That should be expected unless something happens overnight and send it back down. But right now, there is a bid underneath the oil and the energy sector, but don't forget, a lot of that has to do with short covering. Remember I told you I'm looking for a bottoming signal. I'm looking for a capitulation low, a reversal on high volume. Let me show you what that looks like, because we put out a trade today for the members. And we put out a trade today on JP Morgan, all right? The members got in a lot earlier than this. So what I want to show you is, here it is. This is what's called a bottoming tail. This is a reversal pattern, okay? Huge volume, okay? We did 49 million shares on JP Morgan. Average volume is somewhere in the neighborhood of about 16 million shares, 15 million shares a day. That is a bottoming tail. That's a bottoming signal. We went down. We threw up capitulation low, reversal day. Members got an alert down here in this area here, and we were off to the races. So they're already in the money by a good amount. Depending on where they picked it up, they're already in the money by at least 75 cents, and that was just intraday. So this is what a bottoming tail looks like. This is what I was looking for in oil. A huge volume reversal day with a big capitulation and a tail low. That's JP Morgan is a bottoming tail. That's what I'm looking for in oil. Didn't really get it, although we did see the reversal today, but I just want to show you this is an actual trade that went out to the members this morning. It went out probably about, I would say around 11 o'clock this morning, somewhere in that neighborhood, and it went out right around here. Okay, so those are the things we like to do for the members. We like it when trades work out. So far, this is working out. We should see follow through in JP Morgan, and there should be more upside to be had. Okay, what else do I want to discuss? I discussed gold. I discussed crude. I discussed Whipsaw Wednesday. I discussed the market. I think that's going to be a wrap for tonight. Hopefully this is helpful, folks. Stay on the right side of the markets. I'm not a bull. I'm not a bear. I don't care which way the market goes, nor should you. All you care about is that you can read the tape, read the markets, read what's going on, and be in trades that are headed in the direction that you're playing them. That's really all you care about. You don't care what stock it is. You don't care what earnings are. You don't care what the news is. You don't care what the talking heads on TV are saying. All you care about is being on the correct side of the trade. And that's what I'm trying to help you do here. And hopefully I'm helping you. And therefore, we'll wrap it there. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.